Welcome back, everybody, to another episode of the Dentist Who Invest podcast, episode number 50, the half century, would you believe? And we have got an absolutely incredible guest with us today to speak on something which is very hot at the moment, crypto. Crypto is hot. The bull market, is it still living? Is it dead? That's something that we're going to cover later on the podcast. Of course, I'm super excited to bring to you the 50th episode. Like I say, tremendous that we've finally made it to half a century. And like I say, I wanted to commemorate it with something special. And to do that today, we've got Sudhu in front of us, who runs coinflex, which is a massive, massive, massive crypto exchange. And we are super privileged to have him today on the podcast. Sudhu, how are you?
I'm good, James. Thank you for having us and having me.
No problem whatsoever. It's my absolute pleasure. So I guess what people would like to know, Sudhu, people that don't know you, they might just like to know a little bit about you, your relationship with crypto, and how you transitioned from the traditional finance world to the crypto world. A lot of people will be interested in hearing that, because traditional finance seems so much more stable, I suppose, is the conventional wisdom, as opposed to the crypto world. So what did you see in there? That is something we're going to delve into later. And also a little bit about coinflex too would be nice. Just a little bio just to start us off, if that's good.
Yeah, absolutely. So coinflex is a spin-off from CoinFloor, which is the UK's oldest GBP to Bitcoin spot exchange here in London. And my co-founder, Mark, was the founder of CoinFloor. He's been running exchanges for about 8 or 9 years. He left university to buy and sell crypto, Bitcoin, particularly in pubs from all around London. And as that business grew bigger, he formed an exchange, which was CoinFloor. My background is from the traditional space. I have 20 years of trading derivatives, which are futures and options. I used to trade single stocks and kind of run a team at Merrill Lynch here in London. I used to be a senior trader at DRW and a bunch of other hedge funds. And about 4 years ago, I started sort of reading up around crypto. It was sort of early 2017, and in the online and on the press, there was a lot of mention about Bitcoin. I knew nothing about it, like a lot of people. Started going to meetups around London and bumped into Mark, essentially. And it was a very interesting time in his thought process, because he was looking to grow CoinFloor beyond just spot trading and into futures. And I knew everything about futures and zero about crypto. And so we kind of hit it off. We essentially did a management buyout from CoinFloor of the futures business. We spun it out to Hong Kong and launched there about 3 years ago.
That is super exciting. And coinflex is a huge exchange now. Turnover of 400 million, is that correct, Sudhu?
Actually, 400 million is in one of our products. If you include our repo markets, we trade about 4 billion a day.
Oh, a day.
So we're still
Oh
per
my
day,
goodness.
yeah. So we're still not the in the top 5 exchanges in the world globally, because it's a big market. Binance being the biggest by far, and they trade around 80 billion. To give you by way of comparison, we're in the sort of next set, the bottom set of 5, so somewhere between 5 and 10, and growing fast.
That is incredible. Wow. So privileged to have yourself on the podcast today. So Sudhu, just as we said earlier, what I'd really like to touch upon, because a lot of people will be interested to hear it, what did you see in crypto that led you to leave the security of the traditional finance world?
Yeah. So for me, really, the turning point was that I started to see how you could control your own money. And what I mean by that is, obviously there's the simple case of you can just hold your Bitcoins and Bitcoin Cash in your own wallet and carry it around with you, put it in a safe at home or in a safe deposit box. But beyond that, what I saw in crypto is that you could actually directly access markets yourself as an individual. So, for example, I'll give you an example to help. So if you're like James and you want to trade carbon futures, for example, you would have to go to IG or IB and basically open an account. And that account opening process is very, very lengthy. They ask you about your knowledge. It'll take several weeks to do KYC and stuff. And if you pass that, then you're sort of allowed to trade carbon. Now, that's the first roadblock you have to get through. The second roadblock is that IB, for example, may say that your minimum trade size is £10,000. Now, these are not things that is accessible to everyone. Whereas in crypto, if you look at that same journey, where let's just say you wanted to trade on coinflex, there is no minimum. I think it's maybe $10 as a minimum trade. And to open an account, you open it directly with us. So there is no middleman sitting between us and the exchange. And those are the things that I saw in crypto, which for the first time I'd never seen in the traditional space, that really attracted to me, that you were fundamentally in charge and solely responsible, good and bad, because you can't blame somebody else for decisions you make, but you're solely responsible for investing your own money and trading your own money. And that's what really attracted me to it. It's essentially, we call it, democratizing finance, and it really does. So
yeah, that's awesome. And that's one of the principal philosophies of crypto, isn't it? That you take back control of your wealth, and the principal philosophies of Bitcoin too, that instead of having something which is fundamentally an asset that inflates and its value decreases over time, such as cash is what we're all administered, we're practically given and administered and on a daily basis by the powers that be. And
yep.
inherently, there are some massive flaws with cash and abuse of power by the individuals who control how much that is created. And that was what inspired Bitcoin, or inspired a lot of the space, basically. And obviously Bitcoin is the father of the space, so it all grew from there, from taking back control, which is why a lot of people say, the true philosophers in crypto say, not your keys, not your wallet, and they like to take their crypto off the exchanges. Although that doesn't apply so much nowadays, because it's not like exchanges just go whimsically bust as frequently as they did, certainly in the early days. So Sudhu, you have created Coinflex, you believe in crypto. Crypto still has a lot of detractors out there that somehow don't think it has a future. What would you say to those people?
Yeah, I mean, look, it's a very common mudsling that crypto has had since 2008, which was that it's for money launderers and so forth. Now, in the early days, there was Silk Road, and there was certainly a lot of this going on, because if you wanted to buy drugs or whatever it was, you could, the easiest way was to use Bitcoin. Now, the good thing about 2021 is that there is a lot of blockchain-based technology like chain analysis, who we use, or Elliptic, another big blockchain provider, where they can basically, because it's on public ledgers, they can go back and look at where the history of these coins have come from, almost like 50 hops. Now, I'll tell you why that's important. For example, if you're a bank and you're a Barclays Bank here and you receive money from HSBC, you don't check as a bank that it's fine beyond HSBC, because you're like, well, HSBC sent Barclays the money, so it must be fine. Now, behind HSBC, there might have been Mexican drug lords or money launderers or a bunch of people behind there, potentially, as I'm using this as an example, who might have used the system. But as far as I'm concerned, as Barclays, I received it from HSBC, so everything's good. Now, in crypto, we don't take anyone's word for it. So even if we know that you, James, are sending Coinflex your assets, but you may be a stand-up guy, and we know each other personally, for example, even then, we will use blockchain technology to go back about 50 hops behind to see where these coins are coming from. And so what that means is that we have a very, very accurate way in crypto to look at coin origination, to see whether it's clean coins, dirty coins, mixed coins, anything like that. And so these big firms, which are both unicorns and also used by the US government and other governments to monitor blockchains, they basically came out with some analysis last year that's saying that less than 1% of crypto transactions were suspect, which, by the way, is a way, way, way lower number than for cash. So it is definitely something, these accusations was definitely something that probably were or could have been true at the start. Then it's no longer the case, in my view.
Awesome, brilliant. And where do you see crypto going over the next few years? Where do you see it in terms of taking a greater role within our lives, becoming more fundamentally woven into the fabric of society?
Yeah, look, it's a great question. Unfortunately, the biggest use case for crypto is payments, and unfortunately, right now, crypto is way too volatile for use to use as payments. I'll give you an example. If you go to Starbucks today and you wanted to pay in Bitcoin Cash, Starbucks, by the time you pay for your coffee, the Bitcoin Cash that you sent over, the value of it might have decreased or increased, right? So it creates uncertainty for the vendor, Starbucks in this case, and the person spending it, which is you or I, or any of your listeners. So that uncertainty basically does not encourage crypto to be used as payments. And in Hong Kong, for example, there were many restaurants that accepted Bitcoin and Bitcoin Cash, but again, you have to be kind of careful how you used it, because you may want to save Bitcoin, use cash, or spend Bitcoin, use cash, and so it wasn't very clear. So instead, what's been going on in crypto is obviously people are using it as an investment asset. They buy it, hold it, or trade it, right? So where I'd like to see crypto going in the next few years is to use as a payments as well, because until it's used as payments, we can't truly scale into mainstream society. It'll remain an alternative asset on the side.
Brilliant. There's been some momentum or movement towards that idea or that use case, as you said, in day-to-day transactions already, because I believe that Visa have adopted US dollar coin, although I know that they're working with them. I don't know much more than that. Perhaps you could go into more detail.
Yeah, one of the great innovations and growth in the last few years in crypto has been stablecoins. And stablecoins are essentially tokenized dollars. So you send in $1 to, say, Circle or Coinbase, and they will give you one USDC. Now, the good thing about that, it's one-to-one with a dollar instrument. So it doesn't fluctuate in price than, say, Bitcoin or Bitcoin Cash would, so or Ethereum. So it is becoming a better and better instrument for payments. Which is good for the space overall. Now, obviously, competing alongside stablecoins are these central bank digital currencies. My view on it is that stablecoins are still by far superior to CBDCs because of the fact that they are easily movable, cross-border, seamless, cheap to transact with. But yeah, so if a few years ago, if you looked at stablecoins, there were probably about 15 billion dollars in circulation. Stable coins are now closer to 125 billion. So a huge growth space. And of course, as coinflex, we'll chat on this later, but we've got our own yield-bearing stablecoin FlexUSD. And so there's a lot of innovation going on in the stablecoin space.
Brilliant. Yeah, we will absolutely bring up coinflex. I wanted to know a little bit more about it actually, because I know that coinflex, you'll be able to explain it better than me. It's a combination of a decentralized exchange and a centralized exchange. It's got both features, and you believe that coinflex improves upon the current options that we have in terms of exchanges. So would you like to just maybe go into that in a little bit more detail? What coinflex
Yeah,
does differently?
yeah, absolutely. So we haven't quite got there yet. We're still a couple of months out, but essentially you have two types of exchanges in crypto, which does not exist in the traditional space. One's a centralized exchange, which is the same as Life or ICE or CME, which is the same as traditionals or TradFi. And in crypto, we have this thing called decentralized exchanges, where they're fully automated, smart contract based, and they both have their pros and cons. And a lot of people will choose between one exchange or another, one type or the other. Whereas at coinflex, we want to take the best of both. And so for centralized exchanges, the massive pro is the way the orders trade in the order book, the way orders are matched. So we're keeping that part. Decentralized, in our view, is the best part about it is doesn't control your assets. So we're basically taking the combination, or what you call a hybrid, of the DeFi and CeFi to make the next generation of coinflex. And what that means is that we by ourselves, you use the term not your keys, not your coins earlier. Right now, if you send assets to coinflex or any other CeFi exchange, we hold your assets. So we could be hacked with it, we could move it, we could run off with it. Lots of exchanges have, a lot of exchange users have this risk. When we decentralize the custody part, we will become one signatory amongst many around the world. So we're mitigating that risk, a substantial amount.
Well, that's why, decentralized exchanges, how long have they been around really? Like over a year and a half? When was Uniswap created? Maybe about 2 years ago?
A little bit longer than that. They've
Yeah.
probably been around about 4 years or 5 years.
Oh, really? Okay.
But really, they've boomed in the last 2 to 1.5 years. Yeah.
Yeah, and that'll be because they align with this philosophy that many crypto enthusiasts have, which is that they like to retain custody of their crypto.
Absolutely.
100%. Cool. So you've talked a little bit about CoinFlex and how it's maybe a little bit of a hybrid exchange. What inspired you to start coinflex? What did you see in the crypto world that you thought we can improve upon this, we can do it better, let's launch coinflex?
Yeah, it's a great question. I mean, it was something that to this day we're one of the minorities in, which is called physical futures. And in the traditional space, physical futures are huge. They don't exist in crypto. And at a very simplistic level, what physical futures allows you in delivery is that it allows you to build very simple tokenized products that everyone can use. And what do I mean by that? It means that essentially in crypto markets, there's been sort of two very, very lucrative strategies that trading firms and high frequency firms have been able to make a lot of money off over the last few years. One is called basis trading and the other one is market making. And because we have physical futures, we can actually take both of those products, the basis trading being Flex USD, the market making called AMM Plus, and tokenizing it and making it very simple for retail individuals to trade with. So they can kind of send USDC, press one single button called Mint, and then you have Flex USD, and then in the background, all this really complex repo and futures trading, futures delivery goes on, but the user can decide that he wants to understand it, or he can say, you know what, I'll just trust coinflex and Mint, and coinflex takes your money and sees what kind of returns it can make for you and pays you your interest.
That's interesting because I know that coinflex offers a yield of 18% APY per year on deposited stablecoins, on minted stablecoins, if I'm correct. And that would be what goes on behind the scenes to offer this to people who are uninitiated in the crypto space, this unbelievably high yield.
Yeah, so it's a variable rate instrument. So to be clear, when you quote your APY of 17-18%, it's literally that's the average over the last 7 days or 2 weeks, I think, or something like that. But it's a variable rate instrument that basically you send in dollars, stable coins, it gets minted and it gets deployed into our repo market. Repo market is an unleveraged borrow lend market. It trades. We were the first to launch repo in crypto. I think we probably still are the only ones, pretty much. It doesn't even exist as a central order book in traditional markets. Our repo trades 3 to 4 billion a day, maybe more some days. And essentially, the yield gets generated in this kind of borrow lend book between participants who buy and sell. And what's great about crypto and democratizing finance is this is the first time that individuals can take part in these markets, because these markets have been the preserve of only the very big banks in the past.
I see. And when you use repo in that specific context, let's make that extra clear for anybody who's listening who maybe doesn't have much of a financial background, what that means.
Yeah, repo is essentially a short-term borrow lend. So if I have dollars and I'm doing nothing with it for the next 8 hours to 8 months, I can basically say, look, this is the rate that I want to lend my dollars out to somebody who's using Bitcoin to borrow your dollars. So there's someone else on the other side who's got a lot of Bitcoin and he wants some dollars to pay for bills or to trade with. He can then meet with you, pay your rate, give you a rate to borrow your dollars. He will then give you Bitcoin, so you have an asset back on your side. So it's fully collateralized lending. And then he will take your dollars and either trade with it, spend it, do whatever he wants. But you've got his Bitcoin, you've got a futures position against it in the background, so you have no market risk, and you're essentially just you're being a borrow lend activity.
That is so interesting. Wow, that's awesome. And then to get into the real nitty gritty, it's quite often over collateralized as well to account for
It
the
is.
volatility of Bitcoin.
It is, yeah, totally. So the lender side of it, will put down sort of 20% margin as well if he was interacting. So in some ways, you can say it's 120% collateral, and it's a phenomenal market that it's not something that we dreamt up out of nowhere, but it's something that we've designed because we saw it work. Right now, to trade repo, you have to be like Barclays and HSBC and whatever, and you have to trade with the Bank of England. You, as James, do not have access to this market. And in crypto, we've created a market where you can interact with the big institutions.
That's so interesting.
Yeah.
And I wanted to ask as well, let's say in the instance of Bitcoin can be a cruel mistress sometimes because it can be incredibly volatile. What about if there was to be in the unlikely scenario that Bitcoin had a 20% candle in one day, 20% downward candle, is there a
Mhm.
fail-safe mechanism, or is it all just a huge big balance of probabilities that that's so unlikely to happen that it's not really something that we have to account for? So let's use it in the exact example that you were just talking about. Someone's been over collateralized for this Bitcoin. They've borrowed a specific amount of dollars from them, and Bitcoin has moved so far down that it's no longer worth them repaying their dollars.
Yeah. So, yep, it's a great question. So, from your perspective, to be clear, as the dollar lender, when you have enter into a repo trade, you send your dollars out, they give you Bitcoin, and you get a short futures position. So you have no market risk as a lender, right? Just to be very clear,
Oh, right.
that you will, because of physical delivery, you will always end up back in your same dollar position that you started it, right? So you don't have market risk. Now, where the risk that you do have is the guy that you've just mentioned, the guy on the other side of the trade, who may take your dollars that he's borrowed off you off platform to use it for something else, right? In that scenario, we have this margin and liquidation system going like every other exchange, where we keep monitoring everyone's positions hundreds of times per second. And if the position becomes close to being under margin, we will liquidate his position. So in this example, if Bitcoin starts dropping and he doesn't top up with more collateral, we will cut his position. We will liquidate him in the order book to make sure that you have no risk as the other side of the trade. So the risk that you have right here in this example is that we what if it's so quick that we can't do it fast enough and
Yeah.
we lose a bit of money. So that's the risk that you have. But touch wood, so far we've been through sort of like big 50% type corrections in a day, and we haven't had any losses thus far. But obviously that risk is definitely there, and you have to be mindful of it.
Okay, it's been stress tested then, and that's the thing about the crypto world. It's not long before things get stress tested because obviously the price can be very volatile. Part of the fun.
Yeah, I mean, look, last March it's the March 13th where it was some sort of like a 50% within hours, right? So, these sort of moves definitely do happen, will happen again, and the only way to make sure is to keep going through them and surviving them.
That's so interesting, and those rates are so much better than what you can get in the traditional world as well.
Yeah, look, traditional rates are, I think, 0% to 0.5%, and this is where we've seen such great growth in Flex USD. So Flex USD, for example, has $325 million invested into it by lenders right now. I think since we launched it back in December, there's probably been about $750 million put into that product, and the reason why people are starting to love it is because the yield differential, right? 18% versus zero, which is unheard of. And even in crypto, those yields are actually huge. Forget fiat comparisons, because when you send money into USDC or Tether dollars, they give you a stable coin and they pay you zero with the dollars you send them. They will invest their dollars in sort of money market instruments and short-term debt, for example, in TradFi. We do two things which are very helpful to crypto. One is that we invest the dollars that people send into crypto into the same crypto markets that they send it in, which is repo. And secondly, whatever interest you earn, we take a 10% fee on your interest cut, but 90% of the interest you earn is sent to you every 8 hours on chain. So no matter where you keep your Flex USD, you could keep it in your own cold wallet at home, you will receive interest on chain every 8 hours, which is just great bit of tech.
And that in a nutshell is why the rates are so much better than the traditional world.
Yeah, rates are in so much better because the opportunities are better in crypto. Like when retail futures traders on Binance or coinflex come in, they buy loads of futures and create yield. And so that creates this sort of basis yield, which is why the high rates are coming. But I mean, let's face it, James, the other reason why rates have to be high in crypto is because of the risk you're taking as a lender, right? When you send in your assets, you're sending it to coinflex or Binance, or Huobi or OKX. You're not sending it to you haven't got depositor protection like you have in the UK and the US. You're not sending it to State Street, which sits between you and the exchange. If you're trading on LSE, that protects you. I mean, you're taking some real risk here, right? And
18% is up there with the best that I've seen on the stablecoin front. What is your personal opinion on these extremely high yield crypto accounts? We're talking decentralized exchanges that have 120% APY on their native token. What do you think about their business model? Is that legit?
If you look at some of the DEXs or DeFi swaps where the yields are up there, in the short term, the yields are legit in the sense that what they're doing in the background is that not only are they giving you trading fees or trading P&L like AMM Plus does on coinflex, they're actually dropping their own exchange tokens or tokens on top to create extra yield. So if you looked at AMM Plus, which is yielding like 50% right now, on DeFi, they will give you the 50% and they would chuck in another 50 or 100% using their own tokens. So you can see why in that example it works right now, but it's not sustainable over the long run, right? Because you cannot just drop tokens forever that are made up. So, this is called artificial or juiced yields, and you can't juice these yields forever. So yes, you can farm this, which is the term for earning this. You can yield farm this in the short term. In the long term, or medium term and long term, is not sustainable. Whereas Flex USD and AMM Plus gets its yield from normal market-based activities. We don't airdrop anything to make it artificial. So it also means that you may earn 4% on it one day and 20 the next day because it's a market-based rate. And that's why we really love it, because it is truly sustainable in that we can grow it alongside the growth in the crypto space.
So when we're talking about those really high yield accounts, what you're saying is you can't just indefinitely create these tokens and drop them on the market, because that will mean that the value is diluted because it's inflationary effectively.
Correct. Imagine if you thought, imagine if you were on one of the swaps and that you knew the token drop was, 100,000 tokens a day and you go on for 25 years. I mean, you'd never hold the token, right? You'll keep selling it every time you received it because you knew there was like a billion coming in behind you. So the token price would crash and the yields would drop as well. So it's a very tricky tokenomics model to get to kind of put together in the first place. But secondly, it is not sustainable beyond the short term.
Well, yeah, but I think that you've hit the nail on the head there earlier when you were talking about trading those, yield farmers, they're always dipping in and out of whichever accounts they think are going to have the best yield, and they mightn't stay in them for very long, a few weeks. So I suppose if anybody does want to use those platforms, they need to take more of an active management style to their trading versus coinflex, which is more passive and will be suited to someone who is more time poor, shall we say. Have I just encapsulated it well there?
You have 100%, and yeah, I think I'm going to start using that same analogy because you're totally correct. You cannot be on DeFi and not be watching it several times a day and managing your tokens. On coinflex, on Flex USD in particular, for example, you can actually even watch it, look at it once a week or once a month or even every few months, because the delivery mechanism and the rebidding means that you'll never pay any charges on it. The worst case you may earn zero for a couple of days or a couple of periods. But the point is that it's never going to be negative. So, you can be as active as you choose to be on it.
Sudhu, thank you so much for that. That is clever stuff, and I'm learning here as well. Sudhu, what do you think the future for, first of all, coinflex is, and second of all, crypto?
Yeah, so for coinflex, I mean, the way we see the future is that we become the home of crypto yields, and that means that if you are a lender, if you're a yield collector, if you're a passive, what we call passive capital, i.e. somebody who has capital they wants to deploy, earn fair rates, cut out the middleman, and just keep growing their kind of investment portfolio in the crypto space, coinflex will be your natural home. And so we want to be the go-to place for crypto yields. In terms of crypto itself, I'm particularly bullish on one particular kind of coin, Bitcoin Cash. The reason being is that it's the Bitcoin Cash is stood on the shoulders of giants, which was Bitcoin, as you pointed out. But it has very, very cheap payments because of the large block size it allows. And so I'd like to see more and more crypto, and it may not be Bitcoin Cash, it could also be other crypto assets. It can't be Bitcoin because it's too expensive and too slow. But essentially, I'd like to see crypto being used for payments, because once we see that and we walk around Europe and the rest of the world, and you see signs for, hey, we accept crypto, and you see it in Venezuela and Argentina and El Salvador and places like that. As more countries adopt this, we will see crypto used for payments, and that's where I see the turning point for crypto going mainstream.
And on what you were just talking about there, governments endorsing crypto, do you think that that is something that's going to continue, or will they reach a point where crypto gets so big that they see it as a threat and they go all out to ban it? What's in it for them if they permit crypto to become bigger?
Yeah, look, it's a great question, because obviously the smaller countries that have very high inflation, or who are short of dollars, or have issues accessing banking, crypto is a very, very useful use case, right? It makes complete sense. Now, if you're the US or the British government or the European government, I mean, you can see crypto as a threat because you can't control it. I landed you land at different airports, and what it always tickles me to this day when I see signs saying, if you're carrying more than $10,000 or £10,000, you must sign a form and let customs know. And now, meanwhile, you could have a flash drive with your Bitcoin on, and you could be carrying $100 million worth of Bitcoin, and no one would know. In fact, you don't even need a hash key. If you remember your seed phrases, you can have it in your head and go to any cafe and reconstruct your wallet. Now,
Or just a piece of paper. You could just,
right,
this little piece of paper that's
yeah,
worth 100 million.
right.
Yeah.
So this is where governments are going to be totally anti it, right? So there's lots of things in the future that will hopefully change that. Maybe it's KYC and kind of better ways of managing wallets, or different things like that. But fundamentally, that problem that you control your own money, I think is going to be a problem for governments, and it'll be interesting to see how that plays out, because they obviously see the benefits of blockchain as a technology, and through this whole CBDCs, right? Because carrying fiat around, I mean, who carries cash around, right? I mean, it's expensive to create. It's a pointless exercise when you've got Apple Pay and all kinds of WeChat Pay and all kinds of stuff. So it'll be interesting to see how this plays out over the next few years. But as you say, I don't think it's hard to see what's exactly in for them. Outside the fact that the new generation of people want to control their own money. So unless politicians want to be voted out because they're being unduly restrictive, they have to start understanding the new paradigm that we're in, I think.
Well, central bank digital currencies are something that's extremely lucrative for a government, because there is no pound or dollar that can go untraced when you have a currency that exists on the blockchain, and therefore there's not a single pound or dollar of tax money that you miss out on. But as you say, whether or not they'll want to endorse other cryptos apart from their own central bank digital currency, that remains to be seen. Anything you'd like to add on that, or is that a good synopsis?
No, it's a great synopsis, yeah.
Awesome, cool. Sudhu, thank you so much for your time today. We are going to wrap up very shortly. Let me ask one more question. I'm very curious to hear your answer, and this will be on the tip of everyone's tongue, at the forefront of their mind. Are we still in a Bitcoin bull market? What are your thoughts?
Yeah, look, I have to preface this with say, this is not financial advice, and this is my own
Of course.
personal view. I'm super bullish crypto. I'm not sure which time frame that's in. So obviously everyone wants it today or this month or next month. I think we are in a super cycle, and I think we're going to 100 or 200K in Bitcoin, for example. I just don't know the time period. The trading pattern this year has been very similar to what I remember from 2017, where there was sort of, when I first started tracking Bitcoin, and if that repeats itself, obviously crypto or Bitcoin is going to 100K probably by the end of the year. But really, that's a big if and a big call. I think fundamentally, I'm super bullish it. So you have to be prepared for kind of big drawdowns and big gains, because it's volatile, and but 100% behind it still.
Time frame is so important. You're totally correct. Here is some interesting time frame facts. This is the time frame that we should all be going into the crypto world as Bitcoin investors with this in mind. If you buy Bitcoin, there's never been a 4-year period history where you haven't made money. And that's if you buy it at the very worst time. If you buy it and you hold it for 3 years, 97% chance. If you buy and hold it for 2 years, 72% chance. If you buy and hold it for 1 year, 53% chance. So what does that tell you? That tells you that if you're getting into the crypto market, you're a passive holder in Bitcoin, you should, worst case scenario, be expecting to wait 4 years before you're profitable. That is the time frame that we should go into it with. Unfortunately, with crypto and Bitcoin, because it's such a nascent, it's a market that tends to attract investors who are inexperienced as a gateway to further investing. And I feel like every jitter, every fluctuation, people panic sell their Bitcoin. It's a very jittery, volatile market. And hence that's why we tend to hear stories like, I bought Bitcoin, then I lost 10% of my investment 3 days after. It will do, it might do that, but you have to have a more broad, longer time frame before you go into the market so that you can be most likely to make profits. That's the best mindset that you can have a long-term time frame. But of course, this is not financial advice, and Sudhu and I would never like to lead anybody astray or for anybody to make any bad investment decisions based off this. Please do your own research, just our opinions. Have you heard those stats before, Sudhu? I don't know if you have.
I have, yeah.
Yeah. So best time frame to go into it. But you know what? S&P 500, the very worst period of, the very longest you would have had to wait in history to make money and be profitable in the S&P 500 was actually even longer than that. It was 5 years, which is why when people say get into indexes and bonds, your FA will usually say 5 years is the minimum time frame before which you should think about drawing profits. Elsewise, you might want to think about another investment vehicle.
No, absolutely. I think I'd like to add two things to what you said, James,
Yes.
which I completely agree with. One is, I think, it's definitely don't trade futures, or leverage instruments in Bitcoin because it's super volatile. You could lose all your deposits. So, I think for early people into crypto, it's definitely worthwhile buying spot. And there's a number of exchanges you can do that in. In the UK, it's CoinFloor, there's Coinbase, there's Kraken. There's, you could do that. And the second thing I think, and this is more really, I'm not a FA, but it's dollar cost averaging. And so buy an amount that you're comfortable investing on a monthly basis, so you drip feed your cash into the market. And DCAs has proven to be a pretty effective strategy as well. So if you keep those two mindsets, dip your toes, and you're interested in crypto, there's a great way to dip your toes.
Wonderful. Sudhu, on that note, we're going to bring proceedings to a close today. Can I just say thank you so much for coming on the Dentistry Invest podcast. There were so many gems of knowledge that you dished out there today. Thank you so much.
Thank you for having me, Jim.
Sudhu, it has been my pleasure. I hope you have a tremendous day, and we shall speak again very soon.
Cool. See ya.